any second now. Okay.
Oh, why am I by myself? Hi, everyone. I don't know what happened. I'm by myself right now. I don't know where Sandy went. Okay. Hi, everyone. We're supposed to be doing market analysis. Oh, there we are. Oh, maybe Sandy's having trouble connecting. But we're going to be doing market analysis today. So I'm so excited to see what Sandy has to say. She's done some good analysis. And can't wait to hear what she's going to tell us. Hey, Sandy.
That was so weird. I don't know what happened there, but it kept logging me out. Are we okay? We are live.
We are live. Yeah, I was just talking to myself.
Okay, awesome. Okay, I do that all the time, especially at the grocery store. Like I walk around talking to myself, and then people must think I'm crazy. But it's all good. Anyway, how are you?
I'm good. How are you?
Good. So today we're going to talk about market analysis and a question Q&A. If anyone has any questions. Okay, so I think there was something that I was going to share, but I don't see like the Facebook thing, so I don't know. Okay, I'm going to go ahead with this anyway. But so I wanted to share. So something I wanted to share. We've talked a couple of times over the last few weeks about the difference between buying a house out of, like, you know, I get people asking me all the time, is the market going to crash? Or people who are waiting for the market to come down. That's a big thing that we hear all the time, right? I'm waiting for the market to come down. And I mean, we know that typically doesn't happen. And even if it happens, that's a hard thing to time, because you would have to buy it at the highest and you'd have to sell at the lowest. And you can't ever know that, because you have to go past that to figure out whether you've hit that target or not, right? You never really know when the bottom is, and you never know when the top is, which is the issue.
Yeah.
So,
and I think so people think, when they think drop, they think a drastic drop, right?
Yeah.
And they're thinking like it's gonna go back to, like, I don't know, 2000 numbers or something, or like 1999, you know, like they're, right. I think also people's understanding of what is a drop is not like what we won't see those kind of drops. And especially, I don't think our government would even ever allow anything like that to happen. Like you can see they're always doing the stimuluses and everything to make sure, because I mean, for Canada, real estate is a major business for Canada. Like a lot of their revenue comes from real estate.
Especially Ontario, right? Especially Ontario. Like I think in Ontario is probably what's kept the economy going the past 10 years, right? Figure out all the spin-off from people buying houses. There's land transfer tax, and people buy furniture, they do renovations, the electricity, the gas, like everything that goes along with that. So there's so much spin-off when people buy houses. So yeah, it's a pretty interesting thing. So when people think that the market's going to drop, you're right. What is it going to drop? Is it a few percentage points? But I have some numbers I want to show that even shocked me when I put them together. And I mean, I knew this was a fact already. I just didn't realize how drastic of a change it was. So I'm going to share my screen and let me show you this. So
yeah, I'm excited to hear what you have to say. Okay. It's always
nice to see if this is
that kind of information.
Yeah, I wonder if this will be like news to you, but you'll know a lot of this stuff already. So here's what I'm going to do. So here's what I want to show. So I've put together this table that shows about, you know, depending on like what happens when you buy a house and the market drops. So let's assume we're going to go, I want to, okay. So up here, I've got the sale price. So I'm going to assume that you buy a house for let's say in today's market is $800,000. So you'll see that here, that's the purchase price. If you put 20% down, it's $160,000 down. You have a mortgage of $640,000. $640,000 at an interest rate of 2%. Now let's say, I think interest rates are lower than 2% right now. Like a lot of people are getting 1.5, 1.6, 1.7 interest rates. So, but I'm going to use a 2% interest rate. Your monthly payment, principal and interest, so this is amortized over 25 years, and it's monthly payment. So the monthly payment would be $2,710.09. Over 5 years, you would pay $58,734 in interest over 5 years. you'd pay $103,870.58 in principal. So what a lot of people don't understand is of this $2,700, you're paying part of that to yourself, right? Part of that is your principal being paid down. This is how much you would have paid down in principal. At the end of 5 years, you would owe $536,129.42 on that mortgage. Okay. Now let's say the prices go down. Say they go down 40,000. Well, that's a big amount, right? $40,000. Now you buy this house at 760,000 because it's gone down 40%. Sorry, it's gone down 10%. Sorry, 10%, which would be 40,000, right? Actually, yeah, 10% is 40,000. You put 20% down on that is 152,000. So you're still only $8,000 less you're putting down. Your principal is now $608,000. Interest rates at 5% at this point, because the interest rates would have to go up for the prices to come down. Your monthly payment is now $3,536 a month. Look at the difference. It's $700. It's what, $700 difference in the monthly payment per month. Interest over 5 years, you'd pay $142,295.13 in interest versus $58,000 in interest. So the principal that you've paid down is $69,874 versus $103,000. And your balance is $538. You owe more on this house after 5 years than you do on this house after 5 years. Now, you've now paid an extra $83,560 in interest. So you have not gained anything here. And the reason for that is because, yes, these houses may go, this house, even if the price comes down, it's going to go back up again. As long as you don't sell it, you're not losing any money. So now you've paid an extra $83,000. You saved $40,000 on the price of the house. You paid an extra $43,000 for this house. This is, I think, what people don't understand. They think that if the price of the house goes down, everything else remains the same, but it doesn't. The interest rate cannot possibly be at 2% at that point. So even if you took an interest rate double of 4%, you're still way ahead of the game if you buy the house at this amount, because the prices are going to come back up again over time. It's crazy. Yeah, you just look at the monthly payment. So I think that's a big thing of what people don't understand about the prices going down and why it doesn't matter.
Yeah. Wow. Yeah, that is I've never seen it this way, and this is definitely a very good visual for people to understand like what actually happens.
Yeah.
Yeah, because I mean, this is a good example. This is basically what you're showing here is also the stress test, right? Because this is actually what exactly is happening. This is and it's why you're doing these numbers, because these are these are like Hamilton numbers, because I just saw exactly this happen. Like I saw the house the one that you looked at, right? Yeah. I was looking at the prices for there. I looked 3 months before. Like I don't know why I was just looking back. Oh, I think it must have been because I was doing comparables, and I was looking further back, and I noticed at the time of when the stress test came in, which is now around 5%, you all of a sudden see this drop of 50K because of the stress test, which is like, this is another example, even just showing this is a good example of what like the stress test does. You know, like people can't afford as much, so you could afford at 800. Now it's 760, right? And then that's what people can afford right now. And so this is actually even a good example of just what the stress test did a few months ago, and now what people under 1.5 mil can't do, like that. Like now they can't afford 800, they can only afford 760. So what's happening? We saw that drop. You see a little drop happen. But even this shows like, yeah, this is a good example. I like it.
You're right. You're right about the stress test, because that's exactly right. The bank is not looking necessarily. I mean, they are looking at this number, but they're looking at this number. They're looking at your monthly payment and what can you pay every month, right? Because they're doing their ratios of what you earn versus what you pay. So your purchasing power when the interest rates are 5% is way lower. So, I mean, there's so many reasons why waiting, it just doesn't make any sense.
Yeah. Yeah, because exactly, like the stress test is preparing us to be able to handle mortgages at 5%. So I think actually right now, then if anything, it's a good thing, because they're doing the stress test like that. Like they've added it for 5%. It's lowered the price. I mean, then again, that's a good reason to start buying now because we're actually getting to buy at a lower amount just because of what they did with the stress test.
That's right.
But you're not paying the 5% yet.
Right.
That will probably happen, I don't know, a couple of years down the road. Hopefully push it further.
Yes. Yes, exactly. Well, it doesn't look like interest rates are going up anytime soon.
Mm-hmm.
Right? So it means that the prices, it's going to keep the prices up there. There's no, right now with the current state, there's no pressure on prices really, other than maybe buyer fatigue with multiple offers. That's about it. But it just doesn't make any sense why. But I think this is a huge visual, like even this, looking that you owe more on this house after 5 years than you do on this house because you're paying so much more. So yes, you are paying more, but you're also paying yourself more. Mm-hmm. Right? So that's the thing. Like you can't save as fast as you can build equity. So this is like what I would call, we talked about last week, a forced savings, because part of this you're paying in principal and part of this you're paying in interest, right? So makes a huge difference. But I love this graph. I think it's really powerful. Well, let's look at prices. Let's look at prices a little bit and see what's going on here if you want.
I love looking at prices.
Okay. So give me an area that you want to look at.
Let's see. Actually, we were talking about before how we're thinking that I don't know. That might be more futuristic. Actually, I was gonna say Toronto because it looks like they think things are gonna stabilize, but actually we won't see that now.
Yeah. Well, here's Toronto. This is the average sale price in Toronto. Now, keep in mind that this is all of Toronto, so this is a really big area, but you can see your return on investment over the past year has been 17%. Overall, this is everything. This is condos, houses, this is absolutely everything, and all of Toronto. So that's a really big area, but your return on investment is 17%. Where are you investing money at 17% right now? Mm-hmm. Right? And like we've talked about, you and I've talked about a number of times, we also have to remember that this 17% is not on 17% of $1 million, it's on 17% of what you put into the house. What was your down payment, right? Yeah. So you're getting that increase over the whole amount, but you only put a certain amount into it. So
your return is actually even much more.
Right, exactly. So it is even much more because this is your return on investment of 800,000 or whatever that is. So let's narrow this down a little bit if you want. We can narrow this down to just houses. So let's say, or even districts. Let's do types. So let's narrow this down to detached houses. And now we're at 20%. So the detached houses have gone up 20% in the past year. So a healthy market, I think year over year, like a healthy balanced market should be about 5 to 6% a year increase in houses. So a 20% increase is a lot, but we can even go back. So if we go back, let's go back. We looked at this chart last week. So if we go back 20 years, there we go. 293% return on investment over 20 years. That's incredible.
And again, that's on the full price of the house, not what you've invested. So
this is incredible. Yeah. Like, even if you look at all the times where people said there's going to be a crash, I'm not going to buy the house, right here, February 2017, and now we're up above that amount. 2000 and, well, we'd have to go back a little bit, but 1989, back here, you'd see a blip again, and now they've well surpassed that price. So here's a perfect reason why, you don't wait. This is why you buy real estate and wait, not wait to buy real estate, because you're losing out. So that's crazy. But let's go back. I'll go back a year. Let's look at maybe
well, even thinking of my parents, like my parents bought their house like 35 years ago, and they paid like 180. Now it's very close to $1 million.
Yeah. Right. So think about that. Like that's their retirement. right? That's a retirement. They don't need, regardless of whether they put any other money away, and as long as they didn't use their house like an ATM, right? As long as they didn't use their house like an ATM, then they're okay. They've got, and just think of all that equity that they could take out of the house or could have over the years to make more money, right? Exactly. So we're just looking at one thing. We're looking at return on investment on that property. But take a look at, let's say they had used the money in there and bought 3 investment properties. All of that return as well goes on top of this. So it's a no-brainer, right? So if you think about the equity they have in their house, and if they're not tapping into it to use it, you're losing money basically. But
100%. Yeah, it's just money that you have. It's like you're saying, like money that you're leaving in the savings account doing nothing for you. And it's just like, why aren't you doing something with it?
Well, you're basically losing money though. You're losing money if that's what you're doing because of inflation. Like you're not even keeping up with inflation. So your money's actually worth less. Mm-hmm. If you leave it in your bank account, your money is actually worth less.
Oh yeah, no, 100%. I was talking about the equity in your house is like a savings account where it's like, you have all this money and, it's like leaving in the saving account, like it's just not working for you. Right. Put it to work.
Yeah.
You don't want to work, put your money to work.
Exactly. So let's take a look. Let's change up. So this is detached. Let's see what the condo market has done.
Yeah, let's check out the condo market. I remember last time we looked at it and it was obviously not as high, I believe, but it still did pretty well.
Yeah.
Compared to especially all the comments that people made, everyone was like, stay out of it. Because even I remember, in what we do, condos doesn't really work for us, but just hearing what people were saying about condos, just initially made it even more of a reason to not want to invest. But
so the condo market over the past year has gone up 8%. But down here, where people were saying don't buy condos because the market's crashing, 595,000 in November 2020. That condos now were 673,000. You've made right there almost. So what's that? A little more than $75,000 on your investment of what you put down at 595. If you put down 20%, what's that? Call it 600, right? You put down 120,000. Now you have 200,000. It's not a bad return on your investment for sure, right?
It's not. Can we do it to like a 5-year? Or
yeah, let's do it.
I'm curious to see because I think it did like 2 drops, didn't it? 2 small drops.
Yeah. So here's the 5-year. Here's the 5-year. So so yeah, you got a bit. Well,
no, I meant
you've got some ups and downs for sure, month over month. But
but that's interesting. Yeah, in around April, last year it went up high and then it dropped. Tried to recover, it dropped a little bit, and then it recovered.
Yeah. 51% return on investment in 5 years.
5 years, yeah.
Yeah. Craziness.
Yeah, you just I feel like in anything that you invest in, I don't think any house you invest in, as long as the only thing I think where you can lose money is like that. If you don't know how to do flips, don't get into flips because that is short term and you really have to really know your analysis. But yeah, if you keep the houses long term,
you got to have a
really good bank account. It's a good savings account.
you got to have a plan B if you're doing flips in case you got to hold on to it. That's the only thing, right? Because that's the reality. If the prices go down, you want to hold on to it for a little bit, rent it out for a bit, and then sell it. Let's check out different areas. You got some other areas you want to look at?
Let's see Brampton. Brampton, I felt like shot up pretty quick, a lot.
I think Brampton
area that I have some tenant properties there, and thinking to liquidate some of them, not liquidate, refinance some of them.
Yeah, so
quite a bit of money has come.
Yeah, I'm gonna guess that Brampton's probably one of the highest, the markets that have gone up the most. So since 2017, it's gone up for 50%, 48% since 2017.
This is a 5-year trend. Yeah, look at this. We've been looking right here at the end in January. Oh wow, it really Yeah, it jumped up quite a bit.
Yeah. I want to go 1 year. I want to go
Yeah,
12 months. Let's see.
let's do the 1 year to see the
So
return.
1 year, yeah, it's gone up 16% year over year.
Yeah,
So
my house did quite the jump. I was like, "Whoa, I have some money. I need to play with that."
yes, exactly. So yeah, but it's interesting, eh? So that's everything in Brampton. So that's including, I think,
Oh yeah, let's check detached because I'm sure I feel like detached homes. Oh my God, they just went I mean, I feel like at least my house maybe again because I was too busy working on other stuff to pay attention. I was just in shock when I happened to like see how things were going. Yeah, 20%. Yeah.
20% year over year. Let's see, 5 years, 50%. So about the same. About the same. I think it was 48. I think it was 48 when you factored in the condos, right?
Yes, yeah.
That's pretty interesting though. I want to go back and search. Let's see, find some areas where it's, think of an area,
What
think of
about
another area.
London?
Sorry?
What about London? Everyone's so interested in London these days.
Let me check. I'm not sure if I may not be able to pull up London here, but let me take a look.
Or you know what actually is another hot area that actually currently is very hot? Like the Durham area. So
Yeah,
Oshawa, those areas are like
a
seem
lot.
to be going insane. Actually, yeah, we should do those. Let's do those areas.
Let me
Like
check London first, see if I can pull
sure.
up in here. I should be able to.
You can search by at the top you have the little search. London. But yeah, it seems like the Durham area is probably picking up like at least this whole year it seems like it's been doing very, very well.
Yeah. So I don't think I can pull up Durham itself.
No, but we could do like Oshawa. I think I saw like
Yeah,
Oshawa.
I can do Oshawa for sure. So let's say Oshawa. Well, we can add a few. I think we can add, let's see Oshawa here. So Oshawa over the past 5 years is 53%. Let's say, let's do a year. 30%.
Oh wow. Although
Yeah.
I believe that. Oh my God, I
Yes.
saw one. January was insane. I couldn't believe. Yeah, I believe it.
You're
I
right,
felt
because there's the big leap there, right? January. So yeah, Oshawa is a hot spot for sure. Let's check out some other areas in there.
I'm surprised that actually something must have happened in I think it was 2017. There was like a little blip there.
Yeah.
Curious what happened around that time frame.
Well, the end depends on how far back. So let's check Whitby. So Whitby would be 5 years is 33. Oh no, year is 33%.
Wow. Yeah, they're
33%.
doing really well over
Yeah.
there. I know everyone's talking about over there. If only I lived a little closer to that side because my husband
Yes.
won't do work over there.
It's a bit of a drive, right? So let me see. Let me see if I can change criteria. I want to try Ajax and then Pickering. Let's see what happened there.
Or even let's see.
23% in Ajax.
Wow.
And let's see Pickering.
I wonder what caused January to jump up so high. Trying to remember what happened at that. What? Because it was a very big jump. Like I think like
Yeah.
for example that 20% was mainly in January where it's just like boom.
You know what? I would say it's probably it's probably price point. Like people were getting priced out of some of the other areas. You know what I mean?
Mm-hmm.
So
They're moving to other areas that they could afford.
yeah, I most likely. Let me go back here for a second. That was Ajax. Let's look at Pickering. Give me a second.
Yeah, because that was really shocking to see the price just did a jump so high. I couldn't believe it.
Oh, I see what I did. Sorry. So Pickering was 27. So I think pretty much Ajax, Pickering, Whitby were about 30-ish, and then Oshawa was higher. I would say Oshawa, probably that big jump was just affordability. Like people were getting priced out of Pickering, Ajax, Whitby, and move. You could buy so much more in Oshawa. I think that would be. I want to check.
I agree to that. Yeah, because Pickering and Ajax are still very. Wait, I don't know where Ajax is. Is
So
Ajax
it's
close
Pickering,
close
then
to Toronto?
Ajax.
Okay.
So you got Pickering, then you hit Ajax, then you hit Whitby, and then Oshawa.
Oh, okay. I didn't know that. But yeah, oh, so that makes sense. Yeah, because I did notice how, because I remember at the beginning of the year we were not like with my husband, but other partners, we were dealing with Oshawa, and yeah, it was crazy to see what was happening over there. I mean, we were able to take advantage of some of that stuff, which is good.
Yeah, exactly. I was thinking of what was I thinking about that way? It's gone right out of my mind.
Peterborough?
Well, I'll check. I was thinking somewhere else just past Oshawa. You got Bowmanville, Clarington, those areas, but Coburg. I want to check Collingwood. I feel like Collingwood's gone up quite a bit.
Yeah, Collingwood would be. Yeah, see what's. Yeah, even
actually look, Collingwood's down year over year.
Oh wow!
There you go. Look, we found an opportunity, Diana.
Wow.
It's down 10%. But how many sales were there? Because it could be that too. Like there could have been some big sales in that time period. But let me check.
That was in September 2020 where it went down for some reason, and then right now it's going down again, June.
Yeah. I want to see 5 years though.
Yeah, let's do 5 years. I
so
wonder
5 years is on.
It's where is it 2026? I wonder if it's, although I thought cottage areas were doing really well.
Well, it could, you know what, it could be. Let me just see something here. So let me see the units sold there in 5 years. Because it could just be that. So 35. You know what, these sometimes can be like where there's some higher end that have sold. So it could skew the numbers a little bit. You know what I mean? Mm-hmm. Like could be anything. But yeah, if you look here, like there was only 10 sales in December 2020.
Can we do the 5 year? Because I just remember when I was initially, that was like one of the areas that we were looking to invest in, just because it works, in my husband's area. Oh, what is that? Wow, it's been very up and down last year and this year.
So I'm going to say probably it's probably the number of units, and sometimes there may be some months where there's a lot of higher end units that sell, and some months where it's more lower end units that sell. Because there's not a lot of them, it will skew the numbers that way and look at, you know what I mean?
Yeah. So, well, that was actually something like that. We were looking initially in that area to invest in, and we just found that the prices were so high. So it kind of makes sense with this numbers. I think it's maybe, again, like out of the GTA, people went to Collingwood, went crazy, bought really, really high, and then realized that the prices were too high, and then like doing these drastic up and downs. Because I remember looking last year thinking like that would be a nice area for us to invest.
Well,
but
I think it didn't make
sense in the
I still think it is.
Oh yeah, I think it is, but it's at the time we looked at numbers wise, we were just like this. We were just like, there's better other opportunities in other places.
Yeah,
it looks like this is probably a good time to start looking. Seems like the opportunities are coming.
Yeah, if you like that area, I would definitely. But I think it's I think a lot of it there's not enough sales to keep it really consistent and to tell what's going on. Like I don't think what's happening is that the prices are way up here and then those prices are coming down. I think it may be just the properties people are buying are in the lower end. Do you know what I'm saying? Yeah. Like I think the houses that, the houses that were selling for 900,000 are still not selling for 900,000. There just weren't as many sales. There were more sales maybe in the lower price point, and that could be why it looks like.
Yeah, that makes sense, because that's actually what we were planning to do over there. I mean, always, I guess that's what flippers do, right? Yeah. That's what my husband does, is like we're trying to find houses that need a lot of renovations, and
yeah,
so that makes sense.
But you know what? Okay, so let's look at something different.
We should keep that one in the books for next month. We should track Collingwood.
Yeah. Well, I think you can look here as well. Like there's areas near Collingwood, right? So if we let's change the area. Let's change the criteria, because there's also like there's Collingwood, there's Blue Mountain, there's all those areas up there. So I'm not sure what the whole Wasaga Beach. So take out Collingwood and let's add in. I saw Blue Mountain here.
Right there, you just had it. Oh, it's down a little. Right there.
There it is.
Yeah. Wow. And this is a
Okay,
5
this is
year?
no, this is the number that have sold. So let me go to the average price.
Oh, okay. So they've sold a lot in I don't know what that time frame was.
Okay, hold on. So this is Blue Mountain, 184% in the last 5 years.
Wow.
Holy,
a lot.
Holy.
For
Okay,
just
so
5
this,
years.
yes. So this is Blue Mountain over the past year. So Blue Mountain is up 6%, Collingwood's down 10%. So not huge. So here's I think this might be an opportunity here, actually.
Yeah, it's a very it fluctuates a lot, but it's very interesting because the other one where you're showing the sales, there were a lot of sales. Can we see when those sales were happening? You know what it must have been? I bet you it was probably the sale. A lot of sales were happening before the summer to prepare, like buying a lot of cottages to prepare for the summer. That's probably what happens in these areas. Is you see probably. I'm kind of curious if that's what's happening. Because you saw like that huge jump. No, which one? Or was it a 1 year trend? Because we saw, I'm surprised. Remember
this is 1 year.
Oh, maybe 2 year or the 5 year? Remember, we saw like such a huge jump. Yeah, this.
Yeah, this. Okay, yeah.
Why is oh, that's strange that this one does. But so this is, yeah, units sold. Oh, in July though. July 2020. Oh, okay. Actually, that was when cottages were very popular at that. Like people were like, get into the cottages. We're in the lockdown.
People were buying cottages because okay, interesting. That's really interesting. Yeah.
I'm surprised that it's like at the end of July. Well, I guess again, preparing probably for the winter. Yeah, I don't know. I'm surprised that the timing of that. What was happening at that time? There was we were going back in, were we going? No, we weren't going. We were going to be going back into a lockdown, I think. I
think we were open a little bit in July, right? So
yeah, in July. When did we close again? That was like in the fall, right?
Yeah. So July 20, so just interesting to see if every July, like this is November, the units are higher. October, interesting. Yeah, very interesting. Anyway, that gives you a good indication of what's going on in different areas.
Yeah. Did we do Wasaga? I'm curious if Wasaga, just because it's closer to, I mean, actually, so is Blue Mountain.
Let's see. Okay, you have to help me find.
Up, just up to. I think it was, yes, right at the here. It's right in the middle of the screen. Yeah.
So Wasaga, this is units sold. Let me go to price.
Units sold.
So this is the price. So this is in the last 5 years is 108%.
Wow. Wow. That's a lot.
That's a lot. Let's go 12 months. 47% in the last year.
Wow.
So Wasaga is clearly the hot spot.
Yeah. Interesting. Because it's Blue Mountain basically there too, but
well, they're all fairly close. They're all fairly close together. So yeah, it's very interesting that it's up 47%.
Wow.
Blue Mountain is up 5 or what was it, 6%? And then
and Collingwood is
down
in the negatives.
Crazy.
Yeah.
Interesting. Wow.
Can we check again the sold?
The number of sold?
I think the solds were again around in the same. It seemed like in July.
There was a lot.
March.
60 in July.
In June, that was June, and March there was another 60.
Yeah.
This is the 12 month. Could we do the 5 year? Boom.
Wow. Look at that. Look at how many more sales since COVID.
That's crazy.
Crazy, eh?
Yeah. Yeah. In July, October, well, July, September. I find it very interesting that the buys, I mean, that this must be, oh, let's see, when are the downs? So if we look at to 2018, like January is the low, and then January, I mean, that's
Yeah,
standard, actually.
seems to
That's
be.
very standard.
So there you go. If you're going to buy there, buy in January. Let's
Hmm.
see if that holds true in the prices too, because
Oh, yeah, true. Hmm.
so January, yeah, there you go.
Hmm.
January, all this January, that January 2018 was up.
A little bit higher.
Yeah, so January is the time.
Hmm.
Because I mean, who wants to be driving up there in January? And everybody spent all their money.
Yeah, after Christmas,
Everybody's broke.
everyone's broke.
Yeah. So yeah, that's pretty interesting. Yeah. Okay. We'll have to keep an eye on that. We'll have to keep tabs on that.
Yeah, yeah, that'll be an interesting one to see how it goes because
Yeah.
it's for you, the fluctuations are a lot for
Yeah.
there.
I'm gonna just go back to the sheet as we wrap up because this is mind blowing. This
Mhm.
is like mind blowing if you look at this sheet. So
And I hope
uh,
everyone understands what we're looking at here.
yeah,
Because it's just it is very interesting. Yeah, it is. I think, yeah, that's great that you put that there. I've never seen it this way.
yeah,
And yeah, it shows you especially for example, like right now, even with the stress test, I mean, take advantage right now before things go to 5% because we're like in a, I guess in an interesting spot where the stress test is basically your scenario two of 760 with a 5%, but we're still able to take advantage at least interest rates of 2%. So I feel like we're in you know, a spot
yeah.
where it's like take advantage now since before the interest rates go up, because as they go up more, you'll
Just even look at this number here. This is
mhm,
your monthly payment. Like that's a lot of money every month,
yeah.
right? 2,700 versus 3,500.
Hmm. And
So
all that extra is just going to your interest, not
yeah,
even.
like just look at this. This tell these three lines here tell you the whole story. So your monthly payment is 2,700 versus 35. Interest over 5 years, you paid 60,000 interest over 5 years versus 140. The bank, look at the bank. We wonder why the banks are rich. Look at how much more money the bank just got here at 5% interest, and your principal. You've now paid yourself $103,000 versus paying 142,000 to the bank. Here you've paid the bank 70,000. Sorry, your principal, you've paid 70,000.
Hmm.
So it totally reverses. It's craziness.
Yeah. Yeah, and that's something just to take note that like that the balance of on principle, like
Yeah,
that's what the government tries to do. They want to make everything balanced is what they always try to do,
yeah,
right? It's like we all think exactly saying like, oh, we have to buy at a certain amount or whatever. The bank makes sure that we stay balanced, and that's why you always hear, for example, interest rate going up or going down because they see a situation happen, and that's how they control the market.
right. Yeah. So that's really interesting. We'll have to keep our eye on some of these markets. What are we doing next week on
I'm not
crypto?
sure because I think I think we kind of mixed everything around.
We got off track, but you know
Yeah.
what? That's okay because I really wanted to show this chart. I
Yeah.
mean, we've been talking about this for a long time. I really wanted to put these numbers together because I think it is extremely powerful for people to understand why you don't wait for the prices to come down.
Yeah,
This
no,
is
I agree. It was good, even though we went up. I think it was really good to see this, to get people to see this and
yeah,
continue to understand how the market works.
for sure.
But I don't know now because technically, I believe last week we did like anything about real estate, right? And
Yeah,
normally after market analysis is that. That's why I don't know
yeah.
if we should just maybe start again on we go on mindset, or should we do the Q&A one? I don't know.
Yeah. Well, you know
We'll
what? I
figure
think
it out.
let's do Q&A. So let's figure out some questions that people have been asking. But I think this is a good question of people asking, like, the market's going to come down. What do you think? Like when people, so I think this is kind of a Q&A, because this is one of the biggest questions that I get all the time. Like, I think the market's going to come down. Should I wait?
Yeah.
So this is a good indication of why you shouldn't. But yeah.
Yeah.
Okay.
Or waiting, like the only waiting you do, I mean, you shouldn't wait, but if you don't have a good team under you where you feel confident that they know what they're doing, then maybe you may wait to find the right people, but you're still always actively moving forward, you know?
Yes.
Is I think the important thing is to say is that, like, don't ever think of it as waiting. Like, just make sure you're actively moving forward, either making sure you have, like, finding the right realtor for you, finding the real brokers, like whatever you need to get your team to go forward, so that you can make sure you're, making, good decisions, or finding at least the people to help you to close your deals well.
Yeah. Agreed.
Mm-hmm.
Agreed, for sure. Okay. Okay, Diana, it's been a pleasure as always. And I will see you next Tuesday again on the flip side.
Good. Yeah, it was really good chatting with you. I love the information you gave. So it was really good. I hope everyone really gets good value from this.
Yeah. Okay. Thanks.
Thank
I'll
you,
talk to you soon.
everyone. Bye,
Bye.
Sandy.
Bye.